The entire middle class is currently paralyzed by a number on a screen. They open up the news, they see that the national average mortgage rate is sitting at 7%, and they completely surrender. They pack up their dreams of building wealth, they sign another 12-month lease on their overpriced apartment, and they decide to sit on the sidelines, praying to the Federal Reserve to magically make housing affordable again. They are playing the game by the rules designed by the banks. And if you play by the bank's rules, you will be a financial slave for the rest of your life. You do not have to accept a 7% interest rate. You do not have to beg a mortgage underwriter for permission to buy a house. You do not even need a credit check. What if I told you that there are millions of properties in the United States right now with a locked-in 30-year fixed interest rate of 3%, and you can legally take ownership of those houses and keep that exact same interest rate? Today, I'm going to teach you the most aggressive, highly profitable, and fiercely guarded secret in the American real estate market. We are going to completely bypass the modern banking system. I am going to show you how to execute a subject to real estate transaction. This is Property Path. Stop crying about interest rates. It is time to steal them. To understand the sheer mathematical power of what I am about to teach you, we have to travel back in time to the golden era of cheap debt, 2020 and 2021. During the pandemic, the federal government printed trillions of dollars and slashed interest rates to zero. Millions of Americans rushed out and bought houses, locking in historically low mortgage rates of 2.7, 3, and 3.5%. Fast forward to today. The economy has shifted. Inflation is crushing the working class. Layoffs are sweeping across the corporate sector. And life is happening to those exact same homeowners. People are getting divorced. People are losing their jobs. People are being forced to relocate across the country to find work. They have to sell their house, and they have to sell it right now. But when they put their house on the market, nobody is buying. Why? Because the retail buyers cannot afford the new 7% interest rates. The house sits on Zillow for 60 days, 90 days, 120 days. The seller is bleeding cash. They are staring down the barrel of a foreclosure that will destroy their credit for 7 years. They are desperate and they are out of options. This is where the amateur investor walks away. The amateur looks at the house, looks at the 7% interest rates at their local bank, realizes the property won't cash flow as a rental, and moves on. You are not an amateur. You are a transaction engineer. You do not see a problem. You see a distressed seller sitting on a golden ticket, a 3% mortgage. You are going to acquire that property subject to the existing financing. Let me define exactly what this means, because it is the most misunderstood concept in real estate. When you buy a house subject to, you are not assuming the loan. If you assume a loan, you have to go to the bank, submit your W-2s, undergo a massive credit check, and beg the bank to transfer the debt into your name. In a subject to transaction, the seller's original mortgage stays exactly where it is. It stays in the seller's name. It stays on the seller's credit report. But the physical ownership of the property, the deed transfers to you. You legally own the house. You control the asset. You get all the tax benefits. You get the appreciation. You get the rental income. But the debt belongs to the seller. You simply make an agreement to log into their portal and make the monthly payment on their behalf. Let us run the undisputed math on why this creates instant millionaires. Let's say a distressed seller owns a house worth $300,000. They owe $280,000 on their mortgage. Because they bought it in 2021, their interest rate is 3%. Their total monthly payment principal, interest, taxes, and insurance is $1,500 a month. If you bought this exact same house today for $300,000 with a traditional bank loan at 7%, your monthly payment would be $2,400. The current market rent for this house is $2,200. If you buy this house the traditional way, you lose $200 every single month. It is a liability. It is financial suicide. But you buy it subject to. You approach the desperate seller. You say, "Mr. Seller, I see your house has been sitting on the market for 4 months. I see you are moving out of state next week, and you are terrified of making 2 mortgage payments. I will buy your house today. I will take over your monthly payments so you never have to worry about this house again, and I will give you $10,000 in cash right now to help you move." The seller is exhausted. They just want the pain to stop. They agree. You go to a title company or a real estate attorney. The seller signs the warranty deed over to your LLC. You hand the seller a check for $10,000. You now own a $300,000 asset for exactly $10,000 out of pocket. Your monthly payment to the bank is the seller's original $1,500. You place a tenant in the property paying the market rent of $2,200. You are instantly generating $700 a month in pure, positive cash flow, $8,400 a year in net profit. Plus, your tenant is paying down the seller's 3% loan, meaning you are building equity every single month. You completely bypass the Federal Reserve. You bypass the credit bureaus. You manufactured a high-yield, cash-flowing asset out of thin air by simply taking over the paperwork. But right now, the skeptics are screaming at their screens. Why would a seller ever agree to leave a massive loan in their name while giving you the deed? That is insane. What if you stop paying the mortgage? You will ruin their credit. Yes, if you stop paying the mortgage, their credit gets destroyed. But you are dealing with highly distressed sellers. Logic goes out the window when a foreclosure auction is 30 days away. To a seller facing bankruptcy or a brutal divorce, you are not a risk. You are a savior. You are the only person offering them a lifeline. Furthermore, you do not expect them to just blindly trust you. Professionals build ironclad systems of trust. When you close a subject to deal, you do not tell the seller, "Hey, just trust me, I will mail a check to your bank." You use a third-party servicing company. You set up an escrow account with a licensed servicing firm. Your tenant pays the rent directly to the servicing company. The servicing company automatically pays the seller's mortgage and then deposits the remaining profit into your bank account. The seller gets a login portal to verify that the mortgage is paid on time every single month. You remove the human error. You institutionalize the process. Now, we must address the elephant in the room. We must talk about the trap, the terrifying legal clause that stops 99% of amateur investors from ever attempting a subject to transaction. It is called the due on sale clause. In 1982, the federal government passed the Garn-St. Germain Depository Institutions Act. This law allowed banks to insert a specific clause into every single mortgage contract in America. The due on sale clause states that if the borrower transfers the title or the deed of the property to another person without the bank's permission, the bank has the legal right to call the loan due. This means the bank can demand that the entire remaining balance of the mortgage be paid in full within 30 days. If it is not paid, the bank will foreclose and take the house back. When amateurs hear this, they run away in sheer terror. They think subject to is illegal. Let me be absolutely clear. Subject to is 100% legal. It is listed online to 103 of the standard HUD-1 settlement statement used by the federal government. Violating the due on sale clause is not a crime. It is simply a breach of a civil contract. But does the bank actually want to call the loan due? Banks are not in the real estate business. They are in the paper business. They do not want to own houses. They do not want to pay lawyers to execute foreclosures. They want their monthly interest payments. If the mortgage is being paid on time every single month by a third-party servicing company, the bank's automated systems are happy. The algorithm does not flag a performing asset. The vast majority of the time, the bank simply looks the other way. But most of the time is not a business strategy. Hope is not an operating procedure. You must actively protect your asset from the bank's auditors. If you just take the deed from John Smith and transfer it directly into Alpha Real Estate LLC, the bank's automated title tracking software is going to flag the transaction immediately. An LLC is a massive red flag. You do not use an LLC to hold the deed. You use a land trust. The Garn-St. Germain Act contains a very specific, highly lucrative loophole. It explicitly states that a bank cannot trigger the due on sale clause if the property is transferred into an inter vivos trust, a living trust where the original borrower remains the beneficiary. This was designed so that families could put their homes into trusts for estate planning without getting foreclosed on. We are going to weaponize that exact loophole. Here is the masterclass execution. At the closing table, you do not transfer the deed to your company. You have the seller transfer the deed into a newly created trust. Let's call it the 123 Elm Street Trust. You name the seller as the initial beneficiary of the trust. Because the seller is the beneficiary, this transfer is fully protected by federal law. The bank cannot trigger the due on sale clause. You send the trust documents to the bank, and the bank approves it as a standard estate planning move. But the transaction is not over. 48 hours later, sitting in the privacy of your attorney's office, the seller signs a separate document called an assignment of beneficial interest. The seller legally assigns 100% of their beneficial interest in the 123 Elm Street Trust over to your LLC. This document is private. It is not recorded at the county courthouse. It is not mailed to the bank. It is kept in a filing cabinet. To the outside world and to the bank's automated software, the house is simply sitting in a family trust, but behind the curtain, your corporate entity holds all the power, all the equity, and all the control. You have successfully smoke-screened the banking system. You have acquired a 3% interest rate in a 7% world. You have locked in massive cash flow. And you did it without a credit check, without an underwriter, and without a down payment. This is what transaction engineering looks like. The middle class will continue to complain that the housing market is unfair. They will continue to blame the government, the economy, and the interest rates for their lack of wealth. Let them complain. The market does not reward victims. It rewards execution. Every time you drive through a neighborhood, realize that half the houses you are looking at have a 3% mortgage attached to them. The inventory is unlimited. The distressed sellers are everywhere. You have the blueprint. You understand the math. You know how to build the land trust. Smoke screen. I want you to take action right now. I want you to start networking with real estate agents who have listings that have been sitting on the market for more than 90 days. Call them up. Ask them if their seller's loan is assumable or if the seller is open to creative financing because they are bleeding cash. Stop asking the bank for permission to be wealthy. Take the deed, control the debt, and build your empire. I will see you at the closing table.